This is the Max Keiser playbook. I've been sharing this with everybody around the world for 10 years now. And a lot of people in the world who got into Bitcoin at $1, $10, $50, $100, except for Peter Schiff, who I told to buy it at $1 or $10 and he refused.
Oh no, he says you didn't tell him at $1, you told him at $10.
Right, but thousands of people, hundreds of thousands of people around the world did. They're sitting on millions and millions of dollars worth of unrealized profits. And here's the thing, Stacey, I saw you were tweeting about, when are you going to sell it? And you're like, well...
Yeah, here's my opinion here. The smartest, wealthiest people I know got rich and stayed rich with a simple strategy. You create or you buy assets that are high quality, pristine assets. You hold them forever. And when you need cash to live, you finance them, you borrow against them.
Max Keiser and Michael Saylor explain when you should sell your Bitcoin. Bitcoin is crashing. Kind of. It's down over nearly 20% in the last 24 hours and has broken major support levels at $52,000 and $48,000. But let's not forget that we are still up over 100% since the beginning of the year. It's also only halfway through February. In this video, Max Keiser answers the best exit strategy to sell your Bitcoin. Make sure to stick around to the end of the video for a piece of Bitcoin data that may be of comfort to investors. Also, only a tiny percentage of my viewers are actually subscribed. If you enjoy the video, consider subscribing. It's free and you can always change your mind. Enjoy the video.
And oodles. The upside is virtually infinite because Bitcoin has no top. Why? Because fiat money has no bottom. I'm not going to sell it because I predicted going up to 500,000 or more, and I'm just going to use it as collateral.
Yes.
As borrow against it, and I can use it that way. Why would I ever sell it?
I won't sell any Bitcoin from here on out. There's lots of new platforms and services being offered for people in the Bitcoin space, so you can always just keep stacking and then borrow against your Bitcoin. And I do want to say, you can't say that Max didn't tell you so. That these people are coming, these corporations are coming, these institutions are coming. It was really triggered by Paul Tudor Jones entering the space back in the second quarter of 2020. And now we see Elon Musk and Tesla with $1.5 billion. We don't know how much SpaceX has bought, but presumably they also bought some for their treasury, but they don't have to file that with the SEC. And, well, I'm going to show you a headline. I just showed it to you while Max was talking, so he didn't see it, though. I'm going to read it to Max. U.S. corporates hold record $2.5 trillion in cash to meet pandemic shock. So that's $2.5 trillion. So if they all do like Elon, how much is that? $250 billion worth of purchases coming. So even if half of them do it, that's 125. If 25% of them do it, it's like 75 billion. So there's a lot more money on corporate balance sheets where, that Tesla money came from.
Right. Look at the big picture here. There's $300 trillion worth of investable assets on planet Earth. That includes stocks, bonds, property, precious metals. How much of that is invested in Bitcoin right now? Less than 1%. So we're looking to do the Elon here, go 10%. That's $30 trillion right there. Bitcoin is still less than $1 trillion. So I figure that's how I come up with 40x from here. That's just a 10% allocation to Bitcoin. And of course, the thing is that we're going to see fiat money basically go the way of all fiat money, which is to 99.9% loss of purchasing power. So that 10% effectively becomes 50, 60, 70%. Again, there is no top to the price of Bitcoin because fiat money is a bottomless pit that loses for the past 300 years 99.9% of its purchasing power.
So there you can see, as Max so brilliantly puts it, there is no exit strategy. You would have to be crazy to sell your Bitcoin in exchange for fiat money that we know for a fact is devaluing at 15% per year. To get a second opinion, here's Michael Saylor on when to sell your Bitcoin.
Against them. Like I buy a football team and I hold it forever, and I borrow, and I have a good banking relationship with a bank, and they loan me money at 3% or 2% interest. I buy a city block in New York City. I hold it 100 years. And then if the Fed prints 10% more money or 5% more money, the building goes up 5% in value if it's truly desirable. If you have assets that are scarce, desirable, and unimpaired, they're not impaired. I use that criteria, right? Because like for 100 years, it was New York City real estate, and maybe New York's not the greatest bet this year. But football franchises, city blocks, if I had an unimpaired, Jeff Bezos held Amazon stock, Mark Zuckerberg held Facebook stock. So buy Bitcoin. Am I going to sell it? No. I'm never going to sell it. I'm never going to, here's two things I don't want. I never want a capital gain tax, and I never want an income tax, right? Okay. Of course. So what's the problem? If I buy an asset and then I'm trading on it and generating yield, I could generate 30% yield, but then I owe 15%, I owe tax on it, right? So if I had $100 million and I trade it, I'm taking a lot of risk. I generate $30 million in yield. I pay $15 million in tax. I have $15 million after tax, and I'm trading it, and I've got all this execution risk.
Right.
If I hold $100 million, and Bitcoin goes up, you fill in what you think it'll go up. It's been going up 200%, but if it went up 20%, the number wouldn't, if it was 5%, the answer wouldn't be different. Let's say it goes up by, it doubles a few times. Well, if it goes up 20% a year, every year, if I need money, I set up a relationship with a bank. And there are companies, some of the new emerging crypto exchanges will give you a loan. NYDIG will give you a loan. Genesis will give you a loan. Eventually, you'll see loans coming from lots of banks, and the entire Bitcoin banking sector will develop. So take your $100 million, borrow $10 million, right now it'd be 5% interest. It wouldn't be 50 basis points because the sector isn't as competitive as in stocks. If I had $100 million of Apple stock, I could borrow at LIBOR plus 50 basis points, right? I could borrow $10 million and pay less than 1% interest on it. So right. I would just, and if I told you the stock was going to go up 10% a year, you would just hold it forever.
Yep.
So why do I sell an asset? I sell it because it's impaired. If you have a company, it's impaired by a bad CEO. It's impaired by a bad product release. It's impaired because a regulator makes it illegal. If I have $100 million of land in California, why can't I do that? Well, I probably can, except for the fact I might get real estate taxed to death. The governor of California might impair it by passing a zoning law on it, right? If I have land and land gets taxed and it gets impaired, stocks have execution risk. On the other hand, Bitcoin, it doesn't have the property tax risk. It doesn't have the execution risk. There's no new product. It just exists to exist. So the strategy is simple. You buy it and you hold it for 100 years.
So, both the veteran of Bitcoin investing, Max Keiser, and the institutional figurehead spearheading the movement come to the same conclusion. Never sell your Bitcoin. Now, for a piece of data that may be of comfort to holders of Bitcoin, here you can see the Bitcoin supply stored in exchange wallets is at its lowest level since almost 2.5 years. This is a very comforting statistic for holders because generally the opposite happens when the Bitcoin price has had such a parabolic move upwards. We see holders transfer coins onto exchanges to sell it for a good price after these huge price moves up. However, this time it's different, with coins continuing to leave exchanges for cold storage, likely being bought up by institutional buyers. Anyway guys, hope you enjoyed the video and at least feel a little bit more comforted holding through the dips. As always, have a great day and I'll see you in the next video.